mind, looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Poole Locke YouTube channel. I'm James Locke. Today we're going to answer some of the Ask James questions of the day. We have this first question from Carol, and she wants to know, what's an example of a bad news event coming out and then the market's overreacting? All right, Carol, let's dive deeper into that and examples of market overreactions to bad news events. And we're going to keep this in context of investing for income and, keeping our risk reduced. Now, one of the most notable instances was when the pandemic struck, right? As COVID-19 spread globally, many sectors such as airlines, hospitality, cruise ships were severely impacted. Stock prices plummeted, dividend yields, got cut to zero. It was a prime opportunity for dividend investors, but with a caveat, right? You had to be discerning, right? So some companies directly affected by the pandemic, they were risky investments, as their ability to sustain dividends was uncertain amidst economic shutdowns and travel restrictions. Now, to navigate this period successfully, investors had to look beyond just high dividend, yields. They needed to analyze the balance sheet of potential investments. Cash reserves became crucial. Companies with robust cash positions were better positioned to weather the storm and continue paying dividends through the downturns. So this strategic approach allowed investors to identify solid opportunities amidst the chaos. But timing was key. Government interventions, such as Federal Reserve stimulus measures and fiscal policies, swiftly stabilized markets, causing stock prices to recover rapidly. However, market overreactions aren't limited to global pandemics. Take the example of regional banks, back when they were facing financial distress due to poor loans and capitalization. So amidst the turmoil, there were regional banks that remained stable, offering attractive dividend yields. Now, for savvy investors focused on income, this presented a buying opportunity. So by carefully selecting regional banks with strong fundamentals and sustainable dividends, investors capitalized on the market's exaggerated response to sector-wide challenges. The key takeaways here is that dividend investing isn't solely about chasing high yields. It's about combining income generation with prudent risk management. Now, successful dividend investing involves researching companies' financial health, understanding their cash flow capabilities, and assessing their reliance in turbulent times. Now, by doing so, investors can identify undervalued opportunities where dividend income aligns with long-term growth potential. Right? So in conclusion, staying informed and acting strategically during market disruptions can lead to profitable outcomes in dividend investing. Right? It's about maintaining a disciplined approach, focusing on companies with solid fundamentals, and being prepared to capitalize when market sentiment swings excessively. So, great question. If you would like to send in your question, you can do so by emailing them to poolelocke@poolelocke.com. So I want to get on to our second question. This is from Jan. Jan says, I'm a DIY investor. That's a do-it-yourself investor. I've interviewed a few advisors over the last few years, but my methods always outperform their methods. So do I really need an advisor to get into dividend investing? All right, Jan, it sounds like you've had success as a do-it-yourself investor, DIY, and that's commendable. Now, when considering whether you need an advisor for dividend investing, there are several factors to weigh. First, it's important to reflect on the time frame of your success. Many professionals who have performed well over a certain period acknowledge the role of luck, especially during favorable market conditions like those following the 2008 financial crisis, when quantitative easing boosted growth stocks. If your strategy has consistently outperformed for over 20 years, that's certainly notable. But maintaining success over extended periods can be challenging without professional guidance. So one issue some advisors face is their approach to investment. So some opt for easy solutions like mutual funds or exchange traded funds, which might not always align with high dividend stock strategies. Others hesitate to outsource management to specialized firms due to fee concerns or a lack of internal research capabilities. So this can be a drawback if their resources are limited, evident especially in smaller offices with minimal support staff. Conversely, larger firms may have deeper research capabilities but could prioritize profit margins due to shareholder expectations. So choosing the right advisor involves assessing their ability to conduct thorough research and tailor strategies to your financial goals. Now, if you visit an advisor's office and notice a small team with limited resources, it may indicate their inability to handle complex dividend investing strategies independently. Now, in such cases, outsourcing management to reputable firms can combine the personal touch of a small advisor with the expertise of a larger institution, ensuring your investments are well managed and aligned with your income-focused retirement goals. Ultimately, the decision boils down to your comfort level and the complexity of your investment needs. If you've navigated dividend investing successfully on your own, you may continue doing so. But be aware of the additional benefits a knowledgeable advisor can bring, especially in managing risk and maintaining consistent income streams through retirement. Understanding these dynamics will empower you to make informed choices that support your financial well-being over the long term. 2 great questions today. As always, if you want to send in your question, you can do so by emailing them to Poole Locke at poolelocke.com. If you like what you heard, go ahead, like and subscribe to our channel. I'm James Locke, your retirement income source. I'll see you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear.